All right, hey there. Good morning, everybody. Chris Franks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on Tuesday. Oh, what is it? July 13th, 2021. Here in beautiful Bernie, Texas, man. I'll tell you what, we've been getting this rain lately, and I sure can't complain about that. We've been under a drought for so long. I do miss the sun, but, it is summer, so Texas summers get kind of hot, so I can't really complain there a whole lot either. But we'll see if we continue to get this rain throughout the summer. Hopefully, y'all are doing well where you happen to be. Don't forget, you can join us here at howtotradetowin.com, and you can do it on the cheap right now. As a matter of fact, we've now made it that you can use that code right there that I put on there for the 6-month or the annual Tier 3. So you can get 6 months or 12 months of Tier 3 subscription right there for the lowest price we've ever offered it. So, if it's something you've been thinking about, if you're serious about learning how to trade, guys, you'll come over there. Don't listen to the yahoos online. They're going to tell you whatever they want to tell you. You get out of life what you put into it, right? If you're serious about learning how to trade, if you're tired of trying to have somebody else tell you what to do online and then losing and then being, and then complaining that somebody that you're not paying didn't make you money, and you didn't know how to, use risk management and whatnot properly so that you wouldn't lose your rear end. I'm telling you guys, you should jump in there and do it. Well, you've got over 100 hours of video education, 3 live streams a week. Mondays, we talk about Wyckoff with the charts. Wednesday, we talk about tips, tricks, and techniques to get even those of you who have never traded a day in your life, a nice little rules-based strategy every week to get you into trades and whatnot. And then, of course, on Thursdays, we talk about EW, Elliott Wave there with the charts. So, if you're not learning, if you're with us and you're Tier 3 and you're not learning, you're just not even trying. I'll tell you that right now. Anyway, good to see y'all there. Who's all here already? Don't dare be bullish today. I'm neither bullish nor bearish, guys. Just understand that. I am neither bullish nor bearish. I trade the charts for what they are. Your interpretation of me saying, oh, it might go up or it might go down is your interpretation saying I'm bearish or bullish. Don't ever forget that. I'm not. I don't care which way it goes as long as it moves. That's all that matters, right? Hey there, Hank. Hey there, Mark. Bill's checking in. Data's here as well. White R21, what's up? Let's see here. Might have to do without the air conditioner and get another block of TWC T3. As long as you're not in Texas, don't do without the air conditioner in Texas. I'll tell you, you might not be around long enough to enjoy the Tier 3 there. Hey there, Q the action. Good to see you checking in as always. White R21 says in 4 days the membership expires. We'll grab the discount code for sure. Hey there, Michael Williams. Always good to see you, man. Tell you Ryder checking in as well. He's in those, usually cooler areas. Right, my friend? I'm not sure how you're doing. I know like the Pacific Northwest is getting that heat. They're not liking that a whole lot. That'll teach you for giving us a hard time about this past winter. That freeze and snow and whatever that we had there in February. Ross Mark, what's up, man? Good to see you checking in. Anyway, you can do this all here, guys, at howtotradetowin.com. We're a fun-loving bunch, a great group of people. Everybody's there to try and help everybody out because the way they see it, guys, is this. The more people that are in that understand what they're doing, the more eyes that are in the markets, which means the more opportunities that can be found as a group. You're going to find a lot more opportunities as a group than you are going to by yourself. And so I think that, part of the reason why, our group does so well, and then they're just really helpful and whatnot. Most of them have been there for years. So, you've got this kind of like a real kinship if you want it. A lot of people come in, they join and they don't really say anything. That's okay too. But if you want to join in and say hi and whatever, man, I'll tell you what, you're going to find people here that want to talk to you. That's for sure. So we'd love to have you there, guys. Seriously. Tell you, Ryder, saying it's nice and tolerable where you are. If not, just drive up a few thousand feet more. Exactly, right? Oh, man. Let's go ahead and jump in here, guys, and see where we're at. So we've got this thing still going on here, right? Let me see here. All right, well, I've got to get rid of somebody here since they're coming here spamming the channel. I just don't get it, guys. People come in, they think it's a viable advertising strategy to come in there. They spam the comments section, or they spam the chat there with their stupidness. By the way, guys, don't ever listen when people do that. When you see somebody come out, it's clearly spam. They're talking about, oh man, do this, or you're going to miss out, blah, blah, blah. Don't fall for that nonsense. They're just playing on your emotions. They're trying to get you excitable so you'll go in and buy. Don't do that. Or so you'll go and sell, whatever. Don't ever listen to people like that, all right? So, the main thing for Bitcoin right now are these two red lines. As we zoom out here. So it's this swing low here at around 31,787. And then this interior swing high right here, and I'll tell you why in a minute here, at 35,950 or so, okay? Hey, what's up, Spiral Architect? Always good to see you checking in, man. So the reason why we have these two is because if price drops down below this swing low, then our movement up here is just 3. And then we break down below wave 2 here, so it's an ABC, it's corrective, which means we're going down probably toward 23, 24,000 at least, maybe lower, okay? But, if we break out above this interior swing high here, now this right here is only ABC here. Well, for right now, it's ABC right here with this purple line, okay? So let's just say we stay above this purple line and we break back out above this red line here. This is only 3 down, so this is corrective, which means this is only 3 down. Now, this is only 3 down here, I said, but, you know, again, it depends on how you read it. So if you go here, go 1, 2, 3, 4, 5. Here's A, there's B, and then 1, 2. And then what you'll look at, this is the question here. Is it 1, 2, 3, 4, 1, 2, 3, 4, 5. So now it's a 1, 2, again, and then 1, 2, and then you get this right here, right? See, so it gets you 3, 4, 5, 3, 4, 5, gets it down here, right? So you get a 1, 2, 3, 4, 5. You can get 5 out of this down here. So that's why, you know, depending on how you look at it, so you can get ABC down, just like we talked about ABC up here potentially. So you can get ABC down here. So if you break out above this swing high, this locks this in as just 3 down. That locks this in as corrective, which means we should then be breaking out above this high here. And if we're breaking out above this high here, then we've got a minimum 1, 2, 3, 4, 5 as a leading diagonal, or potentially, as I'm usually labeling it right now, is just a 1, 2, 1, 2 here heading up. And then we'll have that 3 coming in. So that's why, you know, that's why we have these two levels here. Now, locally, you want to watch this purple level here. You know, as we look at this here, the idea again being that we've got this 3 down. Like I said, you can get this down here is 5 down. So we're kind of watching that at the moment. We'll see what happens. You know, don't get overly excited yet. Locally here, I've got a possible count off this swing low that says maybe we've got a leading diagonal here. So an ABC is a 1, 2, and we've got ABC, 3, 4, and then ABC is 5 here, right? So we've got a potential leading diagonal here, and then an ABC on the down here. But we're pretty close to the swing low here. It hit this demand structure in the wick down here, and that's why it's breaking out there. That's where it's breaking out. It's also where this previous swing low hit right here, you see? And we're taking off. So we're going to look, first of all, for a breakout of this descending channel. If we do that, then that should produce a pattern target here of $1,237.80 above the point of breakout. That's based on the height here of the channel. And that's looking pretty good because now we're breaking back out above this 1 hour pivot. So setting it up, but then we need to get above this wave 1 here to start that up. Now doing that, we might also end up having a double bottom here. You see this right here? Got these 2 bottoms. And so in that case, if we do get above that wave 1 up here, and it confirms this potential double bottom pattern target wise, we'll be looking at, once we get above wave 1 there, we'll be looking at up here around 37,200 or so. Let me reset this here real quick. Whoops. Looks like my pivots got removed there, the labeling for the pivots. So let's get back in here. There we go. Yeah, so that'll get you right up here around that R2 pivot on the 1 hour. And of course, that takes you then above this swing high, which also takes you above this swing high. And again, then you're looking at potentially 5 up at least as a leading diagonal here, or 1, 2, 1, 2, 3, 4, 5 heading up there, getting a nice move up. So a lot of potential bullishness in that, but it has to get up there, guys. Don't think, oh God, it's definitely going to do that. You need to see. We've got steps. First step is to break out of this descending channel resistance, then to get above wave B, then to get above the pivot, then wave 1, and then that swing high right there. I mean, those are the steps you got to go through as it's moving up. Now, you can choose wherever you want to enter if it breaks out and goes, you know, based on your level of risk tolerance or risk aversion. You know, you can wait till, you know, till it gets through a few of these levels. You can do it as it breaks out of the descending channel resistance. You just have to understand where your invalidation levels are, okay? And so if it breaks out, let's say it breaks out of here, and then it drops back below this swing low here, well, guess what? All of a sudden, the count here is invalidated, especially if it drops down below this purple line here. So you have to understand where your invalidation levels are, guys, because that's going to tell you where to put your stop losses. All right? But if it drops below to this morning's swing low, well, then we're probably looking at it's going to drop below the purple line, which means we can still potentially have it up. But once it drops below this purple line, it has to remain above this swing low here. It cannot, whatever it does, it cannot go below this red line. Once it goes below this red line, like I said, that locks this in as 3 waves up. That's corrective. And we're going down lower low below this area here. And because if that's corrective there, then what I'm looking at, as I've been telling you, is this is 1, this is 2 of that fifth or of that fourth wave or whatever, you know, heading down there, finishing it off. The 5th wave overall of that 4th wave, of C of that 4th wave. Yeah, there we go. Whatever. What I'm saying here is this is 1 and 2 of that next 5 wave move down. So as long as it stays above that swing low right there, we've still got a chance that it's going to be bullish and pop up through the top there. Again, as I said, I'm neither bullish nor bearish. I just want it to move. As long as it moves, we can trade it, guys. That's what it means to be a trader, okay? As long as it moves, we can trade it. Let me see here. Who's here? Alan, what's up, man? Rossmark says, what a load of sideways. No kidding, right? Is that Darius Shabab? Hey, what's up, man? I hope I didn't butcher your name there, but glad to have you checking in. Thank you. Is it correct that, Rossmark's asking, is it correct that wave C also tends to unfold in 5 subwaves? Yes, yes. Yeah, so generally wave A will be 5 waves, 5 subwaves, and wave C will be 5 subwaves, and wave B will be 3. The only time that changes is if wave B is a triangle, in which case it'll be A, B, C, D, E, you know, to make that triangle. Or if it's a flat. And if it's a flat, then wave A is going to have 3 down, and wave B will have, you know, or, you know, in this case, 3. But wave A will have 3, wave B will have 3, and then wave C will have 5. But generally, normal zigzag, wave A is going to have 5 subwaves as wave C as well. And then wave B will either be a triangle or it'll have just 3 in the opposite direction there. So, yeah. Let me see here. What's going on, Andrew? Good morning, sir. Good to see you there. Gervin says, in other group, I see a primary labeled as an WXY, but there are targets like around the 19Ks. Yeah, exactly. If it drops down, you know, we're looking at potentially grabbing that 23 to 24, but like I said, that would be a minimum target area. You know, we've looked at it already where it could actually head down much lower if it extends fully, depending on your count. And, you know, your count just depends on where you're starting up here. You know, we've talked about this all through this time here. Oh, my gosh, I've got all this other stuff from training stuff that we do. Oh, man. See, this is what I'm telling you guys. This was yesterday. We were looking at all this, what's it called? Wyckoff yesterday. So, let's kind of look up here. And so it kind of just depends on what you've got going over here. Here, you know, do you have this as an ending diagonal? If so, then we start the count right here. Do you have this as a flat correction? If you have this as a flat correction, then we're doing here ABC down, ABC up, and then 1, 2, 3, 4, 5 potentially. Or 1, 2, 3, 4, 5 of 5, you know, as it does it. But it just depends on where does your count start here. Does it count at the top or does it start here? Because I can give you a perfectly logical count, as I've done already, in both scenarios. Where your correction does start up here at the top and this isn't any diagonal, or where it does start right here and this is just a flat correction. So yeah, it just depends, guys. But the good thing is, a lot of you go in here, you go, oh, but you have to know what it's doing up here. No, you don't. You just have to know what you're looking at locally. Are you trading or are you trying to buy the top or bottom? First of all, if you're trying to buy the top or bottom, like the very highest or the very lowest price, you're trying to sell or buy it, you're going to lose. I'm just telling you guys, you're going to lose most of the time. I've been doing this how long now? Quarter of a century? And I would still lose pretty consistently trying to catch the absolute top, the absolute bottom. That's silliness. But a lot of new traders come in, they think that's how they have to be. Because they go all in, and they go all in on high leverage. So they can't afford any pullback. They've got to get there and have it go up immediately. Well, there's your problem, guys. You're causing yourself to lose money. It's not anybody else. It's not Wall Street. It's not Wales. It's not whatever. It's you. You're causing yourself to lose that money. You got to understand that. But as long as you know where you are locally and you've got some sort of Elliott Wave counter, you know exactly where your validation and invalidation levels are. You know exactly where you need to get out. And if you know exactly where you need to get out, then you know exactly, if you know how to do risk management properly, you know exactly what size position you can have. And then it doesn't matter. It's like 1% or less of your portfolio. Who cares? That's nothing. That's nothing. But you got to stress out because you go all in on high leverage and you just hope it reverses immediately where you're buying or selling. So, you're setting yourself up to lose, guys. Don't do that. Don't do that, all right? You don't have to know where it is. You just have to know what the options are and where they become invalidated. As long as you do that, you can trade. You can be a winning trader all day, every day. Doesn't mean you'll win every trade. You're not going to win every trade. Again, I've been doing this how long? I'm going to tell you right now, you're not going to lose or you're not going to win every trade. It's just, it doesn't happen. There's no way to do it. You can say, oh, well, you're just not a good trader. That's why. No, I'm telling you, part of trading is losing money. And if you think it's something different, you're showing your naivety. And you're going to lose a lot of money thinking that's silliness. Okay? So don't do that, guys. There's no reason for you to lose the money that you've been losing if you've been losing it here. Other than just, lack of, failure of an ability to be humble, to admit that you don't know what you're doing and then to learn. To be stubborn. These are the reasons why you lose money, guys. Not because of Wall Street, not because of bulls or bears or whales or whatever. It's silliness. Those are just people who don't take responsibility for their actions. And if you're jumping in the market and you don't know what you're doing, you have to be honest with yourself. You don't know what you're doing and you're jumping in there, guess what? That's all your fault. That pride will kill you quick, fast, and in a hurry in the markets, guys, okay? Let me see here. Yeah, you could have a WXY that ends in an ABC itself as well. Sure, yeah. There's options. It just depends. That's why I tell you guys, don't trade your corrections. Don't trade against the trend. There's no reason to do that. The one thing you can do right away to help you increase your success is just trade in the direction of the trend. If the trend is heading down, just sell the rejections. If the trend is heading up, just buy the support. When you're trying to counter trade the trend, when you're trying to trade that counter trend, that's where you lose your money because so many different ways it can play out. What's going on, Esteban? Always good to see you. Alan says, fail to plan, plan to fail. Man, I'll tell you what, seriously. In trading, it's a big deal, guys. You have to plan. Ross Mag, you can attest to the not winning every trade part? Yeah. But it's all right. You don't have to win every trade. You don't even have to have a... Guys, you know what? Here's that secret that rarely anybody tells you. You don't have to have a winning, what's it called? Trend there. You don't have to win more than 50% of your trades. You could win 25% of your trades as long as you're doing your risk management properly and whatnot. You can do 25% of your trades and still be ahead. You can win. You can make 1 out of 4. Win 1 out of 4 trades and still be ahead. But most people don't understand that. They think they have to have this huge winning streak, which makes them hold on to position because they're scared to lose. Stop being scared to lose your money. Now, be scared to lose your money if you're not implementing risk management correctly. But other than that, as long as you are, I mean, geez, don't put yourself through that what you don't have to. Big picture here, I mean, as far as pivots go, guys, you're just looking for an impulsive breakout above the daily pivot here. And not just above the daily pivot, but it has to be above this swing high, just above. If you can get that, the odds are increased quite a bit that the bottom's probably in and we're heading up. But again, you still need to get above this swing high up here. So the R1 pivot. This is a nice orderly decline right here. It fits well, as I showed you on the smaller time frame, within that channel. ABC, the corrections usually work within channels. It's your impulsive, your motive waves that don't. So usually if you've got a wave 3, the wave 3 will break out of the channel. But if it's just an ABC, 90+% of the time, it'll just sit there in the channel, the entire correction. So we've got a good channel going right now on this, where we are. So that kind of gives you some, maybe some bullish hope there. Let me get this stupid thing come back on. There we go. So, nothing too terrible just yet. We've got some potential. I kind of struggle to call this bullish divergence here because you see this big dip down right here and then move back up. I mean, really, if you're looking at this as divergence, it should come from this because it's such a deep move into the move. It's such a deep counter trend move into that advance there. So it really should be from this point to this point, which obviously is lower lows there with your RSI and lower lows there with price. So, I don't consider this really bullish divergence right here. But what I will note is that you are getting, in general, higher lows coming off that. So there is that attempt by demand to reverse that momentum. And that's what it is. And that's important. That's important. But, I would really hesitate to call that bullish divergence all through here because of this large dip in between. That's such a large dip on that small rally there that you really should come off that. So, yeah. Let's see here. That's why you say you're going fishing and not going catching. You have no idea if you're going to catch it. That's true. That's true. Let me see. How am I seeing the volume profile? Someone was asking before you wrapped up last week. How do I see what volume profile? Where? It depends on where you're looking. Right now, this range right here, gotta zoom out a little bit. This range right here, again, volume-wise, this is adding a lot of support to the idea that this may be accumulation here. But you still need the breakout above this kind of swing high area right here. You still got to get above that. That's why I've got this labeled as accumulation, though. This is a heavy volume spring here, so we get our test after that, and our test is very, very low volume. That's what you want to see. That's a successful test. Usually that indicates that we're headed up. So here's the SOS right after that. Potential LPS right here. We want to see, do we get that breakout above that SOS? If we do, based on Wyckoff here, I would say there's a very strong reason to believe this is accumulation and, this is phase D, interior markup here, and then we'll be hitting phase E and continuing up. But we need to get above this area right here. That's where we need to get above. So, yeah. Let's see here. Bullish, bearish, why not call it a moving divergence? I guess you could. But then everybody be confused because they're all looking for bullish or bearish divergence. I can call it up or down divergence. Or an anti-trend divergence. Or I guess a trend divergence, I guess I could call it, right? Oh, something like that. This over here is VPVR. A visible range. If you're using TradingView, and I think you have to have at least a pro level subscription, but you can go right up here to your little indicators and strategies, little FX symbol. and just start typing invisible. See, right here? That's what it is. All this tells us the volume at price levels. This tells volume in time. So this is how much volume was traded during certain periods of time. This is how much volume was traded at certain price levels that are on your screen here. So this will change as you pull in more information. Here. See how this changes right here? But if we get rid of this, so that changes a bit more. It kind of pushes up here a bit more. Instead of being down so much, a little bit more on the spikes out of here. So yeah. How about a running divergence? I don't know. Do you like to run? I used to like to run. I used to run a lot. 8 miles twice a day. About 5-minute miles. Man. Don't know whatever happened. That was a long time ago. Gosh, it was probably about 15 years ago maybe now. Jeez, oh whiz. That was good stuff. Let me see here. So now we get a test of the spring? No, there's no. I mean, you can have multiple tests of the spring, but you're not going to have a test of the test. No, you're going to have multiple tests of the spring, just like you have the multiple secondary tests often of your selling climax here. Yeah, so you have that. So anyway, so that's kind of what we're looking at, guys. This 4-hour chart, if we look at the candles on this 4-hour chart, this most recent one before the one we're at right now, we've got a good bit of volume. Look, it's higher than all the volume on the rest of this move down, and it's got a great demand wick there. This looks like a hammer. So we just need to break out above it and get a nice bullish candle spread here, and that should confirm this is a reversal here on the 4-hour. But you got a lot of interest down here, and price closed up near where it opened. So that's a big switch there in progress from supply being in control to demand showing up. And it happened right here at the S1 pivot, so that makes sense, right? That's where you usually look for it. S1 pivot. Alan, you walk every day? Too lazy to run? The creek is just the resistance. Creek is just the resistance. So right here, it would be something along this line right here. Kind of like that. So that would be your creek area here. So, something like this. Be somewhere in this area here. And so if it is, then what you're going to see is, and if we can come up here, what you're going to see is a large candle spread and large spike of volume coming out. And that'll tell you where your creek is exactly. That'll be a large move up through the creek. So, but yeah, it's right up in this area. More likely than not, because we've got this all right here. So we'll see a breakout. We'll probably see a breakout there and a pullback to it like this, and then a breakout further. So, but you can see you got lower highs, lower lows here. You want to break that out heading the other way. Come out there. Yeah, exactly. Jump across the creek coming up. That's what I'm saying. That jump across the creek, you're going to want to see a large volume and large candle spread coming out of that. You will. When that happens, that's how you're going to know where that creek is if you don't know where it is coming up to it. But it should be right in this area right here. You should see a nice large movement up. And, understandably, with this almost, with this being such a strong move down here, you should be expecting a strong move, relatively strong move up as well. It makes sense, You don't have a lot of sideways here. You have a short bounce and then whatever. But you don't have this sideways here. So price should kind of boom, 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 boom up there as it moves up nicely through this area here to get back up toward this, toward the top, toward the swing high area. So you should see a larger candle spread, larger volume coming up once we're getting above this area we need to get above here around that 36.5 or so area. So yeah. So, yeah, that's kind of what we're looking at there. As far as the DXY goes, the DXY is being kind of interesting at the moment. So I've got this now as, again, a 1 and a 2, possibly here. Let me zoom out here a bit. Remember, we're looking at the possibility. We're looking at this potentially being the macro low here, right at the beginning of the year. And then we potentially would have a double bottom here. And we have to get above this swing high here to confirm that possible double bottom, which would then give us a pattern target of 97,626 based on the height of this here. Remember, ultimately, I'm looking to get above this wave 4 over here at, I thought I had that marked off. At 94, what is that? Let's see. At 94, I thought it was, yeah, 94,739 or so. We got if we get above that, I think it's all she wrote. You can pretty much just all but guarantee that the bottom's in. Till that point, there's still possible we could roll lower, especially if we still remain below this. Now, if we get above this swing high, that gives us at least an A, B, and working on a C higher. Remember, you want to see 5 waves heading up. So still a lot of iffiness in there, but, the dollar keeps moving against everybody else and keeps on setting itself up there. We're getting some sideways action right here. Right below this this line right here. And so you would expect that, but a breakout out of that would be, obviously a pretty strong, good thing there, sending it up higher. Right now, locally, I've got that, like I said, as a 1, 2 there, and this is a 1 of 3. And I'm looking at it, and there's 2 possibilities here. One is this is 3, 4, and then this is 5 here is 1, and then it's an ABC, ABC, 1, 2, 3, 4, 5. So that gives us a flat correction, and that's going to be, if we push out above this swing high right here at 92,845, that'll confirm that. So we'll just kind of move this all back over here. If it's the count it's in right here, then in this case, we would have 5 down. So that would have to be an A, B, C, 3 up. And then we should have 5 down, which is likely to head on down here to the R1 pivot down here around, or the S1 pivot right here around 91.8 or so. So it's all going to hinge on, do we break out right here above this or not? Because again, if we do, then that says this is 3, this is 4, and then this becomes 5, 1 over here. And then ABC down is A, ABC up is B, 1, 2, 3, 4, 5 down is C, right around where A ends. So it makes a good case for a flat correction on that. But we need to see that breakout above this swing high here to get that. And if the dollar's going up, guys, again, that makes everything else denominated in dollars kind of, got to struggle against that the downward price pressure on it. So yeah. But again, if I'm telling you guys, man, if you're not trading Forex, I don't know what to tell you. A lot of money to be made in Forex. We got a lot of pips this morning off that USD CAD. USD CAD, as far as I'm concerned, is the one you want to trade right now. With oil pulling back in what I believe may be wave B, and then the DXY, the dollar pushing up. I mean, that's a double whammy against the loonie there. It just makes it a really easy trade for the most part, comparatively to to the other ones. But remember, whatever's going on here, you're going to see more or less the opposite on the euro, because the euro makes up that 57% of this weighted basket value of the DXY. So that's why they look so similar when they move, just opposite, inverse. So yeah. Let's see here. Hank's still holding on to hope against hope that it's going to the mid-80s. It may still do it, but I think Hank's willing to die on that hill. But we'll see what happens. Again, we've got to get up there. If we don't get up above those levels I was talking about, yeah, it's going down. Same thing we've been talking about for months and months and months now. So nothing new, no surprise there. We'll see what happens there. What's the minimum account size to start Forex trading? Ernest wants to know. It depends on what broker you go through. Some of them you can start with $100. The thing is, though, you don't want to go in there like you go in with crypto and whatever and just blow your account. You just oversized positions, over leveraged and whatever. You got to understand, guys, if you start with $100 or $1,000, you're going to have small if you trade correctly, you're going to have very small profits at first. That's life, man. If you don't like that, then don't trade. And I don't mean that to be rude. I mean that to be realistic for you guys, because too many new traders come in here, like every one of them. They come in and they want to make all these huge sums of money that they see in their mind, but they're only coming in with $100 or $1,000 or 10 grand. You're not going to make life-changing trades tomorrow with 10 grand, guys. It's not going to happen. All right? But if you learn to trade properly the way we teach it, it's going to take time to get there, but what are you doing in that time anyway? I think that's the great disconnect. I keep bringing this up because I want you guys to get a reality check here. The great disconnect is they come in there like, man, I don't want it to take 5 years for me to make some money. For me to make, money where I can decide if I want to keep my job or not. I want to decide tomorrow. But that's not realistic, guys. You aren't being realistic. And every other Yahoo out there is going to sell you on your lack of being realistic. They're going to say, yeah, man, you need to, they're going to tell you exactly what you want to hear. Stop listening to the Yahoos out there, guys. That's pretty much everybody. Because they're making their money off what you're paying them to learn their secret system. That's going to make you so rich tomorrow. Tell you exactly what you want to hear. And then you're pissed off because you lost all that money. They tell you exactly what you want to hear. I don't think I've ever told anybody exactly what they wanted to hear out here. Most of the time people get upset at me and they call me names. They do all these funny, silly little 3-year-old things because I tell them what they don't want to hear, which is the truth. They don't want to be told that they don't know what they're doing. They don't want to be told that they're using too large a position size. They don't want to be told that they're using too large a leverage, that they're not using risk management, or at least proper risk management, that they've got pie-in-the-sky dreams that aren't realistic. They don't want to be told that. And I'll tell you what, guys, if you're here listening to me and that's what you want to be told, I'm going to tell you need to go somewhere else. And I don't mean that to be rude. I would hope that you listen to this, you go, man, yeah, okay, I get it. Let's change my thinking now. That's what I hope you would do. But if you don't want to, guys, if what you want to be done is just told what you want to hear, you need to go somewhere else. I'm not going to do it. Because how am I helping you if that's what I'm telling you? If what you're thinking is something completely unrealistic, completely ridiculous, which is what most of us do when we come in first to trading, and I sit here and I tell you, yes, that's fine, that's great. I'm going to show you how to do exactly the unrealistic thing that you want to do. I know I can't. I know that's ridiculous. So how am I helping you? All I'm doing is causing you, first of all, to pay me money. So that's money out of your pocket right there. For something that's going to end up losing you even more money. No. Doesn't work for me, guys. Doesn't work for me, okay? Again, you can start trading. You can trade with little bits of money, guys. You just have to be realistic about your return, what you're getting at first. Now, time and compounding, if you trade properly, time and compounding is going to make that money. It's going to take you where you want to go. But you're not going to do it if you don't trade properly along the way. Because you're going to lose it all. You're going to blow it all trying to get there too fast, trying to get rich overnight. That doesn't work, guys. It's like gambling. Every once in a while, somebody gets lucky, and that's what you hear about, and that gets you excited, right? Somebody does a scratch off and they win $1 million, or they're pulling the slot machine over there at the casino and they hit the jackpot, right? Or they're playing roulette, all on black, right? And then they get black. Oh, hey, Or they're throwing dice and they just get on a hot roll, right? But that isn't reality. That doesn't happen to everyone. That happens to a very, very small, tiny bit of people. And if you're basing your hopes and dreams about where you want to get financially on the fact that maybe you might get lucky and be one of those little people, one of that little bit of people, what are you doing, guys? Don't do that. Be realistic. What are you going to be doing in 3 years, 5 years, 10 years from now anyway? If you weren't doing this, you'd be working anyway. If you trade properly, at least you've got a chance to where you can decide if you want to continue working there, or you don't have to work there anymore. Maybe you like your job and you just would like more security, monetary security, wealth security, whatever. These are things that you can do, but you're not going to get rich overnight. And then I think that's unfortunately the big disconnect that most people that you follow online are going to try and feed you on. Seems like every time you turn around, somebody got rich overnight, right? It was luck, guys. And you don't hear about all the other tens of thousands, millions of people that didn't. Hear about that one or two people that did. And then you base your whole idea on being one of them. Don't do that, guys, okay? Let me see here. I mean, honestly, if you ask me about trading in general, I would tell you guys start out with 50 to 75 grand. I mean, realistically, any trader worth their salt will tell you probably around that number, maybe even 100 grand. Because at that point, you're making enough money on your trades to be significant, right? Less than that, you're making smaller amounts that you can't just trade. You're going to have to do something else in the meantime until your trades get up there. But you can start with small amounts and you can be successful over time. But you have to understand, it's going to take time. That's the big key, guys. It's going to take time. All right? Don't lie to yourself. Don't try to BS yourself into thinking that it's not. It's going to. But that's okay. Again, where are you going to be anyway, right? Let me see here. White R21 says, I'm finding it pretty hard to find a Forex broker which lets me use leverage in the EU. Really? Man, ask in one of the channels in Discord and tag me, and I'll do the everyone tag in there so everybody can see it. Because, you know, we've got a lot of members from over there in the EU in that area over there. And somebody might know of a broker that'll work for you. Yeah, so do that. Mark says 10 times overnight with $150, right? They're looking to trade 7 or 8 Dogecoin rallies. Yeah, I mean, you know, but that's where we kind of get, guys, right? And we don't want to do that. We don't want to be those people. We want to be successful, right? Diego, what's up, buddy? Good to see you checking in as always. Yeah, I know, Hank. I know you're all about where it's going. But again, you know, if you zoom out, you know, Hank, you keep talking about the weekly chart and all this other stuff. But at the end of the day, if you zoom out here, oh, that's Bitcoin. My bad. Let me reset this chart here real quick. You know, if you're on that DXY there and you're zooming out to a larger time frame, again, it's the same thing I've told you before. Where it's bouncing right here is a very significant area. It's been significant since 04? Nope. Since 88? It's this area right here, this support resistance area here. But most recently, it was this one right here. And the big important part of this is that here is that resistance, right? And price fired up through it. And if it does that, it usually comes back and it retests it as support and then bounces. And that's exactly what it did. And then here we go, bouncing a bit higher off that. So, I mean, you know, again, if you're looking at the larger time frame, you know, the larger scale things of what's going on, I mean, there's a strong bit of significance in this area right here where it bounced. I mean, you can't ignore that. Even if you want it to go to 88, you can try and ignore that, but it doesn't change anything. Now, if we lose that, then, you know, possibly down here, maybe even the low, the low to mid 88s here, or 80s here, would be where I'd be looking here based on the monthly. But we're building a good case right now for a potential double bottom right here, which would then take us back up, you know, again, up here, which takes us then to this resistance, which means pull back and break out and heading up through there, most likely. But we still got to get above this at least, and then above, you know, that area right there to continue up there. Until then, we could still roll over and head down. But there, don't let your bias there, Hank, make you miss this right here. Which again, as we pull across here, becomes that support resistance all the way back through 88. Long time there. But yeah, again, you know, again, and I feel like I have to keep saying this, guys. Not for Hank, but for the rest of some of y'all that are new. I'm not saying that price is definitely going to go up. I'm saying there's a lot going on right here, just in the chart. And look at this. We've got this hidden bullish divergence right here from back here in 18 to here. Hidden bullish divergence that's going up there. Stoke RSI breaking out of oversold there, coming out here on the monthly. I mean, there's a lot in there why this should potentially go up. But it may or may not. And we have to wait and see what happens with it. Again, if we're looking at that Euro USD there, you see how it's that almost the mirror image? Almost, not quite, but almost with all this. So, again, if the DXY is heading up, your euro is going down. And then if we look at, and then we look at other things. If you look at the things that I talk about often, which has to do with, global finance and macroeconomics and stuff like that, there's a lot of reasons building up there. Now, everybody says inflation because everybody thinks they know what inflation is. And everybody thinks that deflation is the opposite of inflation and all these other misgivings that people don't understand. Everybody thinks that QE means that all this money is flowing out into here and we've all got it. But there's so many misunderstandings with all of that, as I've explained so many times before. So when you put that on top of, if you layer that on top of the chart here, it gives it even more possibility for it to be headed up. But it still has to do it. Again, we still need to break out above the swing high here. Then we need to break out above this swing high here. If we can do that, then, like I said, we're all but guaranteed that this is the bottom here and we're headed up off that. So we'll see, we'll see what happens here as it continues to play out. Could definitely still go lower. That's why we have to watch those levels there. But if we're breaking out above them, it should be less and less thought that it's going to go lower. So we'll see what happens. In the meantime, the good thing is, guys, as traders, we don't care which direction anything goes, right? All we need to do is have price move. That's it. That's all we have to do. Make money with price movements. Doesn't matter. Now, if you're an investor, you want price to go up. But if you're an investor, if you're coming here telling me you're a trader and you're upset because price is going down, then that tells me you're not really understanding what a trader is. That you want to label yourself as a trader because you're trying to buy or sell, but you're really an investor. Remember, traders just care about volatility. They just care that price moves because you make money either direction. An investor cares that price moves up. All right, guys? Ernest, I appreciate you, man. Yeah, again, I don't want to lead. I don't want to mislead anybody here. I've got this strong ethical thing in me, and I can't stand the idea of somebody coming in and then, me just telling them what they want to hear so I can make a few bucks. See, thankfully, I don't have to do that, right? I trade. I make money. That's just not a problem. I make a lot more than what I make with what we do. So that helps me that I don't have to do that. But most of your guys out there, they make most of their money off trying to get you all into doing what they're doing. Promising you some secret sauce, some secret technique that's just going to make you all this sorts of money that they figured out, that works for them day in and day out. Yeah. Maybe it does. But the things that make us, as I keep telling you guys, the thing that make us who we are as traders or investors is different for everybody. It's absolutely different for everybody. And so it may work for them. I'll even give them the benefit of the doubt. I won't even say they're trying to just scam you. Maybe it works for them. But just because it works for them does not mean it's going to work for you. Which is why I teach so many different things. Like I said, for Tier 3, we do Wyckoff method on Mondays. We do tips, tricks, and techniques on Wednesday. We do Elliott Wave on Thursday. Because some of y'all, something is going to make more sense than the other thing. And the key I want to get everybody to do is to figure out what makes the most sense to them, and so they can start developing their system that works for them consistently, rather than trading each chart as it shows up, because that's how you're going to lose money, just trading each chart. But if you develop a system that you can apply to every chart consistently, that's how you make your money, guys. Okay? Let me see here. We got to catch up with you guys. What do I think about algo trading in general? Do you mean for... Now, when you say algo trading, are you talking about for Are you just talking about like bots? Like as traders, there's these bots like 3 commas or something that you can set up. Or are you talking about, legitimate algos that you're not going to get your hands on for a few bucks, that are going to cost tens of thousands of dollars? I mean, algo trading is algo trading. It happens. And, it can give the market short-term reactionary movements. Sure, depending on where it catches the market. If it catches the market sitting back on its heels or whatever, it can surprise you with a little bit of movement, sure. But if you think that you're going to get an algo that works for like $100, no, you're not, guys. You're not. Algos are very good algos. Ones that work consistently are very, very, very expensive. And most of the time, you can't even get them. You've got to get somebody to code one for you that actually works. Not just some guy or gal that knows how to code, but somebody who actually, you're going to have to give it the parameters. See, that's the thing. Guys get on here and they sell these algo bots, right? And they're the silliest things when you look at what actually determines where they're buying or selling. And most of them end up giving you a losing streak. So I would warn you against that if that's what you're asking about. I would warn you against that. If you want a legit algo, guys, you're gonna pay 10 grand or more easily, because you're gonna have to get somebody not only that can program correctly, that can code correctly, but they also have to understand what they're doing in the market, because they're giving you the strategy. And so, and I guess in that point, it depends, are you looking for a shorter term or longer term algo signals, and whatnot? Because algos are alive and well out there. The big guys use them all the time. Most of them are just for the quick buy and sells. But yeah, you're not getting one cheap, guys. I know that's not what you want to hear. But yeah, that stuff, that nonsense that you see for $100 or whatever is just going to lose you money. Usually. Yeah. I can't say that about all of them. I haven't seen all of them. So I can't say that's definitely what it's going to be. But almost exclusively, yeah. If it's really cheap, it's not really worth it. But even if you have an algo, the thing is you have to understand, especially if you get an algo where you can set the parameters, you have to understand what you're doing. You can get algos that give you buy or sell signals, but then what's the risk management associated with that buy or sell, right? So if you get an algo that says, listen, you need to buy here, well, okay, that's fine and great. Where does your stop loss go and why? Because all it takes is one bad trade to lose you money, right? Does that make sense? So yeah, so even when you get the algos, they give these buy and sell signals that may even be decent for them. The question is, where is that, where's your stop loss going to go on it? Yeah. Let me see here. What'd you say there? You were wondering if the hedge funds and institutions work with legit algos mostly? Yeah, they do. They do. Most of your hedge funds and whatnot now are quants. So they do coding and algos and whatnot. There's still some out there that I'm trying to think if I can think of one right now that legitimately doesn't use one at all. I think even the ones where the decisions are kind of made by the people, I think even those, for the most part, are going to have some kind of algos working in tandem with them. I don't think there's any fund now, any hedge fund or whatever, the decent size that's not quant related at this moment now, that doesn't have algos running on those right now. Yeah. Let's see here. Mark says could be malicious code too. Yeah, I wouldn't worry about that so much. I think it would be more poor programming or something with a bot that's being sold online. I mean, you always have to worry. You always have to, be careful about that. Anytime you're buying coding from somebody else, you've always got to be worried there might be some kind of malicious code in it. But I don't think that's such a big thing in general. God, see, I can't even say. I don't want y'all thinking, oh, it's just perfectly fine. We can buy whatever we want out there and not worry about it. But, you do need to worry about it. Anytime you get code from somebody else, it's code that you're not writing, it could be malicious. Sure. Let me see here. Let me see here. Let me see here. Let me see here. But yeah, so anyway, that's kind of where we're at there with, with algos and whatnot. I don't use algos myself. I've worked a few times over the last few years, especially putting together some kind of algo that really have a good enough record. And there's always a bit that you get caught on with it. I mean, it's just things, I guess, if you've been doing this for a long time, you get used to how the market kind of moves. And so you get a feel for it. And it's hard many times to kind of translate that into code. So I haven't been able to, really. I'm still working on it occasionally, but if I do, maybe I'll make it available to everybody. But it's for me. I'm just old, man. I've been around doing this for a long time, and I'm comfortable manually doing it. For me, yeah. Dow Jones still not at a new all-time high, close though. Yeah, why don't we take a look at that real quick? It's trying. Let's see here. Dow Jones. Sorry, guys, I'll get it here. Oh, where is this at? Come on. There we go. So here's what I'm kind of seeing. Whoops, didn't come with me. Here's what I'm seeing for the Dow right now. I've got this as a 4. We're working on 5 here. Locally, I think we've got a 1, 2, 3, 4, and then we're working on wave 2 of 5. So we'll see how this keeps playing out here. But right now, I'm looking to see if we can get this pullback further here, or if this is still wave 1 of 5, maybe still working out here. Until we get a drop down below this wave 4 here at right there around 34, 158 or so. Until we get a breakdown here, we should be looking for higher up. We drop down below that, then we look at, okay, this is 1, 2, 3, 4, 5 probably done. In which case, this larger 5 may be done. You can still see 3's up here, though. So still trying to get above that. The 4 here trying to work its way up. It's the one that continues to lag, as we've been talking about. So, yeah. Did I see your question earlier? Andrew's asking, which question? Or did I answer it? Let me know if I answered it. I might have missed. I don't remember seeing your question there. But yeah, so I mean, right now we're still looking for it to break out above the all-time high over here. And we've got this reset down here on the 1 hour into oversold. We're above the 1 hour pivot. So locally, as long as we're above the 1 hour pivot, we should be considering to go higher. Really, if we're dropping below this wave 4 here, then things get a little sticky, a little iffy. And we have to, look at what we've got going on. Maybe we've got 5 up, so wave 1 of this 5 here. Then we'll have a 2, and then 3, 4, 5 of 5 going up. A scary chart, DJI on the monthly, zoom out 45 years, compares to a massive bubble chart. Appears to be in the euphoric phase. Just opinion, of course, given the current economy, something to prep for. Yeah, and that's what we're looking at as well. Yeah. It's the same thing I've been talking about. We get that 230 somewhat year cycle that we're looking here. Coming way off of, the cycle's not on here, but the cycle starts back, when the U.S. was formed, coming up here. And so we've got this grand super cycle, wave 5, about an 89-year cycle, grand super cycle of 233 years. And then this 89 and this 233 are fib numbers, So, this last 5 here is coming off, this is 1929, right before the Great Depression. And so I'm looking at us being in that fifth wave, finishing up on that. So you did facilitated super cycle question. You did. But this is what's interesting. Look at this, guys. From here, most people kind of get their minds blown here. From like around 65 to the breakout here in 83. This is just sideways, guys. This is one of those very rare inverted symmetrical triangles here, megaphones, for wave 4 that ended here back in 74. And then it took almost 10 years to actually break out of the range and continue up. But this is your Wyckoff reaccumulation right here. And then again right here, this was the dot-com bubble right here in 01. And then this was the 2008 great financial crisis. And there was the 2009 low. Again, sideways for another decade. And then up. And so that's kind of where we're headed off on all that. And of course, we've got this, let me see here. I don't know where this is coming from. Maybe this is on different time frame. Maybe on that weekly. You can see this weekly with these lower lows, lower highs heading down here as prices kind of gone up on that. Not sure where this came from. Maybe it's this local one here. Maybe that's what I'm trying to get you to see. Here on the monthly, you can see that we've got this crazy, crazy, huge bearish divergence going on from, what is that, 2018, beginning of 2018 there. So right here, where we've gone up, huge bearish divergence. Topped out up here in Stochastic RSI and whatnot. Let's see here. Black Man's Guide to Bitcoin, doing better in stock options. Crypto's a junkyard right now. Yeah, crypto, again, it's just a big correction. It's a big corrective movement going on. Corrections are just a pain in the rear end to really kind of to trade. I mean, you can trade them, but you got to know what you're doing. Otherwise, you lose your money easy. Yeah. It is not corrected for inflation, though? What's corrected for inflation? We don't have to correct it for inflation. We're just talking about the chart. We don't need to be corrected for inflation. However, I did show that one chart from, gosh, I can't even think of what it was from. Was it from the Fed or whatever, where we were looking at how the money supply has inflated since the 70s there, when they went off the gold standard. But instead, oh God, what did I say here? How the money supply had gone up, but I can't remember what it was, had gone down the other way. I'll have to find that chart again. I've got it on my timeline somewhere. If you guys wanted to search through Twitter here on my timeline, you'd be able to find it. I don't remember. Can't remember which chart that was. It's been a while. Oh, hey, guys. Hey, don't forget here. If you follow me on Twitter, you can jump on this. They're giving Elliott Wave International is doing a free, I think it's like a 30-minute video or something. They had that. They were going to expire it. They extended it to July 16th, this Friday. So you can just click on this link there. And you sign up for their free EWI club or whatever it is. It doesn't cost anything. You don't have to put in a credit card or anything like that. But you can get access to that video and a whole bunch of other free stuff. If you guys haven't checked it out, definitely do it. I'm always trying to, with EWI, get you guys as much free content as possible in there. And sometimes we get some stuff, as you guys have seen in the past, that you can get for free because, we do pretty well with sending people their way. So a lot of good information in there if you want to check that. Well, I'll see if I can find that chart for Friday. Because I can't even think of where it is at the moment here. Somewhere on my timeline. Some say you need to take inflation into account when interpreting stock prices. Yeah, some are not very smart as well. Again, we're not talking about inflation or whatever. We're talking about the charts themselves. And the charts themselves don't need to be adjusted for inflation. Remember, guys, the charts that we're looking at, especially if we're looking at it in terms of Elliott Wave, they don't have, it doesn't have anything to do with inflation or whatever else. It has to do with how people act and react. That's what it has to do with. So we don't have to correct for inflation. We don't have to do anything like that because the charts, the Elliott Wave, is based upon human action and reaction. Okay? So I would say that you probably shouldn't have to think about, adjusting for inflation or anything like that. Again, I think people that are doing that are just trying to find some edge or something. It's just, I don't know. I've been doing this for as long as I have. I've never adjusted for inflation and been perfectly great with my trading. So, it is what it is, right? Oh, let me see here. Back to my chart stuff here. Let's see here. Yeah, like I said, Hank, I'm not going to keep talking about it, but yeah, again, over the thing, you use it if you want. Use the inflation adjustment if you want. I don't see any reason to use it though. Because again, we're not talking about the prices. We're talking about the structure. Remember, Elliott Wave, guys, is not about your prices. It's about the structure of the movement. That's what it's about. It's not about time. It's not about prices. It's about structure. So if it's about structure, then, you don't have to account. You don't have to change things and whatever. It's just based on that chart there because that chart shows how people are acting or reacting. So, yeah. But would the chart tell a different story with inflation? And again, you have to ask, what kind of inflation are you talking about? Are you talking about real inflation, which is dollar inflation, fiat inflation? Or are you talking about inflation in regards to prices, which isn't really inflation because your prices don't expand or contract. Your prices rise or fall. So they're not inflationary. They're not deflationary. Your money supply can grow or contract. That's inflationary or deflationary. The prices just rise or fall, themselves. They don't inflate or deflate. But I think that, again, with this big move to econometrics, which if any of y'all have ever tried to look into getting into economics programs, especially graduate economic programs, you'll notice that most are, it's very hard to find one often that isn't econometric focused, which is just basically math and statistics. Because really that's just a way to try and turn everything into numbers, but it doesn't work very well. Economics is about, at what point am I willing to sell my thing and are you willing to buy it? And at that point in time, that's the price. Anytime prior or after that, the price is always fluctuating. But people will people want you to believe that prices are either low or they're high. They're not low or high. They're what they are. But see, when you start thinking in terms of that, everything starts becoming numbers. And numbers don't really show the intricacies of what's happening with your economic interaction. So yeah, I hope that makes sense. It may not if you're not into economics, or even if you're into economics versus into econometrics, not, economics as it should be. But, again, they have to, econometrics needs to be for government to base what they're doing on the numbers, right? So if there's no econometrics, then the government can't say, well, we're going to, do this or that because this is rising or that's falling. It's all, econometrics is a way for government to become involved and to have some reasons for doing so. I think it's the best way to probably put that. So yeah. But yeah. But anyway, so it's that's my big that's my big argument against most mainstream economics programs, especially those at the at the high the very high end universities and whatnot. I can't think what I'm trying to say. Ivy League stuff. Because it's so, it's often so strongly based on econometrics rather than the other side of it there, which again is just a way for government to be able to support their reasons for doing whatever they're doing for the economy to make it grow or to slow it down or whatever. So anyway, I probably just confused you all a lot more than anything else, but I tried. Bitcoin's making its way up toward that channel top there, so we'll see what happens with that. You know what? I haven't looked at the Qs in a while, but everybody's talking about them. Oh my gosh, I haven't looked at it since... That's been a long time, hasn't it? Since January, 7 months ago. Oh, this is SQQ, my bad. This is the the flip there. Let me find it real quick. Gosh, is it really this long? No, this is since January or November, I guess. So we hit my target back then, and then some. Let me see here. Let me see what we got going on here. So this looks like an ABC down. This looks like an ABC up. Where's the swing high here? 342.23. 342.80. 1, 2, 3, 4, 5. This looks like a running flat right here. So wave 4 and wave 5, this ends up blowing up to here. Of an interior count, this looks like a potentially maybe a 1, 2, 3, 4, and then this would be 5 here. So let me kind of make a copy here real quick, guys, so I don't mess up this old one. What is today? 13th? Yeah, so if I'm looking at this, I'm saying, okay, that's probably wave 5 right there. 1, 2, 3, 4, 5. And then I think that's going to be, like I said, a wave 4 is a running flat there. So that might make this... we'll just do this real quick. We'll go 1, 2, 3, 4, 5. There we go. Like that. So then locally here, get up here, okay. We got this coming up here, so 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5 maybe. Might be something like this. Get back down one there. What is this, daily? We're dipping back out. Looks like we're kicking back up, but we are in overbought here. Let me get rid of this real quick. Zoom out. Weekly. We're hitting that R1 pivot on the weekly. Again, moving in sideways between the pivot and the R1. We continue up. We'll see, do we get a rejection of the R1? If we do, we drop down below this swing low right here. That should have us at least going to the pivot. If we continue to break out above it, though, we might be looking at that R2 there. Let me see here. Zoom out to the monthly. All right, so monthly, we clearly got a 1, 2 right here. And we got maybe a 1, 2, 3, 4, 5 maybe. So 1, 2. 1, 2, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So it gives us a 1, 2, 3, 4. 1, 2, 3, 4, 5. So 1, 2, 3, 4. So that might be potentially 4 on that. Now I'm not counting all these little ones in between, so this could be 3, 4 here, or this could be 3, 4 here. Moving up. If this is 3, 4 here, well, now we've got a 1, 2, 3, 4, finishing a 5 here. And that would give us then 5 up off this low over here in 02. If we were to look at that. I think whether it's local or larger, I think we're probably coming into a top there. We can look right here on the monthly and, you know, again, we've got bearish divergence here. We're well into overbought. We're getting some lower highs here on the Stochk RSI. Less and less momentum as it goes higher there. So yeah, I think we're probably closer to at least a local top, if not the top off of 02 here. This being the swing low after this being the .com up here, .com bubble burst here. So yeah, you see here. So yeah, you know, again, Qs not looking like they got a lot left in them. We had a good move over here. There was a lot of interest back over here in 08. But remember I told you about all that sideways, right? So at 08 here, the bottom was right here of the market itself. Your indexes bottomed out right here in about March of 09. The Qs bottomed out, as you can see right here, in November of 08. And then that pullback was that wave 2 for it went up here. So, you know, 1, 2, 3, 4, 5 kind of idea. But that volume was pretty heavy on not the very bottom here, but right before it. This one. Right here, October of 08. That's where your volume was. It built up in September, in October of 08. And then right here into November of 08, dropped off almost half. And then you had this over here where you had this bit of a spike right there before it took off. So, yeah, I mean, you know, again, looking at it coming up there. Good possibility that, like I said, this is either the end of this or it's that 4 before the 5 of the end. So, but that monthly is what it is, guys. Your daily, again, looking at something along these lines here, maybe. This being either, like I said, 4 of, you know, whether right here it goes up. 4 of you know, before your final 5, or it's the 5. Somewhere around that area. You know, and so then of course you want to look at oil. You know, if you really want to keep up with your commodities, watch oil. It's usually a pretty good signal. Let's see here. Oil broke out again, it looks like. So, what we got going here? Maybe a 1, 2, 3, 4, 5 ABC. 1, 2, 3, 4, 5. We might still have higher up now. So something like this. I mean, it looks pretty clear like we've got a, you know, 5 down. 1, 2, 3, 4, 5 here. And then you can go 1, 2, and then maybe 1, 2, 3, 4, 5. So 1, 2, 3, 4, 1, 2, 3, 4, 5, 5. And B. And then from there, you know, it could be a 1, 2, 3, 4, 5, or it could be a 1, 2, 5. 78.6 is coming up here. We're about to top out and overbought for Stochastic RSI on the 1 hour. Yeah, 4 hours got a little bit of room there, though. You got a nice kind of bounce off this pivot here. But we're getting right into this area here. So we should generally expect that rejection in this area if this is a, or, 1 and then 2 working its way down. So now we just need to see, do we get the rejection? It drops below this wave B here. Or does it break out above the swing high here? So that's all we're looking at now. We've got the range. If we drop down before wave B, well, we're coming down here. Not quite this far, though, because it's going to change. So you can short oil down to about, if we get a reversal right here at the 78.6, that'll give you 65.51 as your wave 3 target. There we go. And so, again, 4 up here and then 5 on down. 5 will get you right around $63 or so minimum. And so wherever that wave 2 ends, we want to kind of draw a channel in here. Remember what I was talking about earlier on when we were on Bitcoin, and I said, I mentioned that we had a nice orderly decline there on the 1 hour. This right here. And I said it makes a good case for that being an ABC, because if it was a motive waves coming out of there, wave 3 usually drops down below it. So that would be what we'd be looking for here. We get this 1, maybe a 2 up here, and your 3 should break down. Now again, this could still go up here, say 78.6 or something, maybe even higher. But yeah, then you get that breakdown for oil here, which should take wave 3 breaks down below this base channel support. And 4 will pop up right around that area, and then 5, of course, will be lower. But then that'll just be wave A of B. Remember, this is wave A up here off the May 2020 low, which was that negative $42 or so, negative $40. So B should pull back probably into the 40s, I think. And then we'll have C will pop up. If the count's correct, C should then take us well into the hundreds for barrel. But then, again, maybe even 100 and, 160, 180, maybe somewhere up there. And then that should end wave C, and then we'd have, another pullback, which would take us potentially down to those negative numbers again for it. So we'll have to see how it plays out. But that's my bigger, more bearish look on oil on that. And remember, if the economy goes to crud and there's nothing really to do with all that, there's not going to be a lot of demand for oil. There's going to be a lot of pullback in production, pullback in traveling. Some of your biggest utilizers of oil, not only your plastics industries, but, it's your cruise ships and your airplanes. So if you're, if there's a lack of travel, that's what happened back in May of last year. And so, those that usually pick up the oil in May, your airlines, your cruises, the cruise ships, they were like, hey, we don't have any need for it. And like I said, with WTI, if you're holding that contract at the end of the period, you have to take physical possession of the oil. So, but again, Brent C is different. Brent C lets you finish up there in cash if you want, rather, or fiat if you want, instead of actually receiving the oil and whatnot. But yeah, WTI contracts though, if you're holding that contract at the end of the period, you have to take receipt of that oil. You have to take that oil. Can't say. What I'm trying to say here. Let's see here. Silver. What's silver look like? So we got this rejection last night, which took price back down, bounced right off the ascending channel support, rallied back up, it caught a bid, rallied back up to the EQ of that ascending channel there, as well as kind of like that pivot area, the 1 hour, and it's starting to pull back off that. If we get a drop down below this swing low right here at 25.93, we're looking for maybe to head down here to around $24.21.5. But remember, this is just this current one, with this whole kind of, I guess you call it a bearish look to it. Don't forget, we're also monitoring the idea that maybe we've got a triangle forming here. So A, B, C, D, and E. So if price drops below this swing low right here at $23.74, if we drop below that, that'll invalidate that triangle. Now, it's possible we could still have an A, B, and then A, B, C of C. But in that case, if we continue to drop here below $21.81, that'll definitely invalidate all the, any type of triangle right there. Right now, the current triangle we're looking at is A here, B up, C, D, and maybe E here or even lower. But if we lose that swing low, it's still possible A, B, C, as long as it reverses prior to this swing low over here, this wave A. If we break down below that, then it's definitely looking a heck of a lot more like this right here with B completed, heading down to C, $10 and below. So, yeah. That's kind of where we are with that. So, we're playing as we see it right now. Right now, the trend is lower. You can see here on the daily, we're just about to break into overbought here on the daily. So I think we should probably be headed lower overall. As far as the daily goes, pushed up to the pivot was rejected. So we're sitting under the pivot after being rejected. Stochastic RSI is about to hit overbought. I mean, this all says we should probably be headed lower. So I wouldn't try to be long at the moment, silver, on that. Yeah. So that's what we're got right now. Again, back to Bitcoin. We're just looking for that breakout. Then we got steps. Do we get above wave B? Do we hit the pattern target, which takes us above the pivot? Do we then head above the swing high? Then we have to hit this swing high. And if we can get above this, that should take us above this one up here, which is at 36,643 area. And getting above that, then now we're looking a lot more. Now we got at least 5 waves up, if not a 1, 2, 1, 2. So, but until that point, do we lose this low right here with the swing low? And if we lose that, we just can't lose this one right here. If you lose this one, then you're headed down. Do I ever chart something like XAU, XAG? Not very often. Occasionally I'll chart it if somebody wants to see it. I might even have one in here from a while back. We can see what it says. I've got some back here from October of last year. Let's see here. Invalid symbol. What happened there? Did I have it anymore? Maybe they don't have it anymore. Does anybody use Oanda? Do you know if they have that symbol anymore? Because it doesn't appear that they do. Let me do this. Let's do it off silver here. Make a copy. We'll do this and we'll see if we've got something. What's today? 13th? XAU, XAG. Looks like Saxo's got it as well. It wasn't showing up on Oanda, but it's showing up on Saxo here. So Let's kind of zoom out here a bit. I mean, if I'm counting this real quick, I don't know. It looks like maybe like a 1, 2, 3, 4, 1, 2, 3, 4, 5. And so 5 here maybe. Let me zoom out a little bit more. So you had the big move up here into March of 2020, which was that big move down with everything. And of course, it shot up and it's been going down ever since. I mean, if I'm looking at this, this just looks like an ABC here. It's coming straight off there. Let me see here. What's that swing high? 82.52. 82.41. I mean, I can get 5 here and 5 here as an ABC maybe, but you had some bullish divergence coming out here on the weekly from August 20th through February, the beginning of February there, as you can see here. But nothing really impulsive after that. We're kind of hitting this area here now. Kind of hitting this area. Whoops. Right there. Yeah, I mean, if I'm looking at this, maybe we get 5. If we can do this as a 1, 2, and then a 3, 4, and then a 5, that can get us a 3 on the back here. Finding some support around the 70.5, 78. I'm not overly excited about the structure, though, at all. But yeah, I can potentially get 5, 3, 5, 3. Maybe a 5 up here, and then get an A, B, C here. But, you know, we would need to see it break out above this right here. This 85.46 to confirm that reversal. Trader XO, what's up, man? Good to see you checking in. We're just taking a look here at that gold-silver ratio. Oh, let me see here. See, I'm just not convinced. No. Let me see here. Well, that's more than one. That's more than one, yeah. So this isn't a 1, 2, 3, 4, 5. Maybe 1, 2, 3, 4, 5, and then a flat correction here. But this would still have to be 3 here. So we already know that this wave 5 is going to be larger. Kind of get this down here. And even if this is one right here, it's still above. So wave 3 would still be the shortest. I can't help but think this is an ABC heading up here. Off that. I'm doing great, man. I hope you are as well. You look like you've been busy. But yeah, this really looks like... just trying to think if maybe we can... I guess maybe you know, just look at this real quick. Maybe we can get like an ABC as a 1, and then a 2, and then ABC as a 3, and then a 4. And then ABC is a 5, so a diagonal. And then it gets us, I like the bounce here around this 70. I mean, 70.5. I know it goes down towards 78.6, but most of it remains above this 70.5. That's your key level right there, which is just this previous area of resistance support. So yeah. Yeah, that's the hardest thing to do sometimes, right, man? Just letting the market show you what's going on. Just kind of sitting back on your hands and not doing anything. I got bored trading crypto here recently, so I've been trading a heck of a lot of FX. Just making an absolute killing on that USD loonie pair. Man, with oil maybe topping there and then the DXY still trying to push higher. That double whammy on the loonie, man. Makes it a pretty easy trade. Gets good movement out of it. But yeah, I don't normally chart this. I think Telluride, you were the one that was asking, right? Yeah, I don't normally chart this, but looking at it here, I could see maybe a case made for a leading diagonal out of this, and then an ABC on this pullback, and then popping it up there higher. But yeah. FX has been fabulous, man, for sure. Family time is great, that's for sure. I'd like to say we've gone out a lot here, but it's been raining more than anything, and I really can't complain about that. I keep saying that. I say it's been raining as if I'm complaining, but we'll see. Yeah. Again, guys, it's just about the range here. Again, might be accumulation. Good case to be made with the spring in the test right here, but we've got to get the breakout above this level right. You see I caught it right here. And again, right here, we've got to break out above that. If we can break out above that, all but guarantees that the bottom's in. If we can't do that and we lose this swing low here, that's a 3-up correction. Never got the breakout above that last attempt higher. And at that case, we're headed down. So that's what I'm kind of seeing. So, anyway, I'm going to get out of here, guys. That's really all I've got to say. Not a whole lot else really going on. I mean, again, guys, it's range bound. It's been range bound. Remember, as far as Bitcoin goes, guys, we're range bound here. We're range bound here. And then realistically, we're range bound since back over here in the beginning of the year, where we made this first range here. Then we did break up, and then we're back down there. And so, again, we're just going to have to let it resolve itself. If you're going to trade it, you should be trading smaller time frames. Looking for those higher confidence trades off the smaller time frame. We've shown you a few of them that come up here. 15 minutes probably a good one to watch. You had this one at this kind of area here, which dipped a little bit more and then came back up, and then it kind of dropped back. It was okay, but nothing spectacular. It just kind of made you this little bit here, really, after this bit of bullish divergence. But again, guys, if you want to increase the odds that you're going to be more successful in your trading, trade in the direction of the trend on whatever time frame you're on. If you're on the 15-minute here and you're in here, guess what? Your trend is down. Until proven otherwise, you're going to be a lot more successful shorting the rejections than you are going to be buying the counter trend rallies. Now, again, if we break it out through here, well, now we've got a reason that we may be headed up. Here on the 15-minute, it does look like we've got 5 done here. 1, 2, 3, 4, 5. So we're going to look for a pullback. And if we're looking at that pullback there, yeah, you get your 61.8 to your 70.5 right down here in this cluster, this demand cluster here. So I would be looking right now for 32.5 to 32.560 area. And if you can get that break out of there, pattern targets right there. Locally, this may give you a wave 3 then of a minimum. Right up there at about 33.536, and then minimum wave 5 up there at 33.780. If we can get a bounce out of this this box here that carries us out of there. So, hey, Trader XO, man, you have a great day as well, buddy. Thanks for showing up, man. Cue the action. You're welcome. Thank you for joining in. Everybody else as well. I mean, that's what we're looking at, guys. You know, crypto is not very exciting at the moment. It's doing its thing. It's still sideways. So you can make some money, but, you know, you should be just looking at shorter term trades, my opinion right now, more than anything else. But I think right now, you know, again, we've got 1, 2, 3, 4, 5 A, B, C, B. And then we've got 1, 2, 3, 4, 5 here for C. You know, we're bouncing right off that 15-minute S1 pivot. So if we get a breakout above that 15-minute pivot, I mean, you know, that should be good to go. Breaking out of the descending channel resistance should be good to go. Breaking above wave B should be good to go. So 3 target areas you can look for to break out of, deciding when you want to enter, or even a breakout up here at wave 1. If you wait till the wave 1, though, you know, you might get your interior wave 1 of 3 ending about here. So it's going to pull back and then it's going to go up. You just always got to be mindful of where your proper stop loss needs to go, guys, okay? So there you go. That's it, guys. So locally, I mean, there's a lot of hope, I think, in it, but, you know, we don't trade on hope. Trade your smaller time frames and look for confirmation on those bigger time frames to those areas we talked about, and you should be good to go, right? Anyway, I hope you guys have a great day as always. I'll be back on Friday at 11 a.m. Central Standard Time. So hopefully, you'll join in there. And, of course, don't forget, guys, you can join us over at howtotradetowin.com. Man, we'd love to have you there with us. Got a great group of people, you know, over there learning together and finding trades together and everything else. A lot of good eyes finding great opportunities. So, and then, of course, using that code there, you can get a 6-month or 12-month Tier 3 subscription with us. For absolutely stupid, crazy low prices. So, you guys have a great week. Y'all trade safe. And if I don't see you in Discord, hopefully I'll see you guys coming on back on Friday. All right? You guys have a great day. And remember, the only thing you control in the market is how much you lose. That's it. Risk management, most important thing, guys. Take care.